In our previous lesson, we presented various indicators regarding inflation. In this lesson, we will discuss indicators related to employment. Unemployment rate, possibly the most widely known labor market indicator. It measures the number of unemployed people as a percentage of the labor force. Be advised that the rate does not measure the unemployment in the passing of time, but is more like of a photograph of the current situation, or if you prefer, the month it relates to. Hence, the rate rises instead of accelerating, and such a rise could be a negative signal for the currency it relates to, as that would imply that the unemployed have risen in relation to the total workforce, with possible adverse effects on the growth rates of the economy. On the flip side, a drop in the rate could provide some support for the respective economy. Then we have the non-farm payrolls. The non-farm payrolls figure, or the NFP for short, is a key indicator used primarily for the US employment market, despite being used also for other countries as well. It measures the change in the number of people employed during the surveyed month, excluding the farming industry. The main reason for the exclusion of the farming industry relies on the high seasonality of the sector, say for example the harvest period, and thus is excluded to avoid distortion. Basically, the indicator measures the US employment market's ability to create jobs, which also has an effect on consumer spending. It's released on the first Friday of every month, and it is very closely watched by investors as well as the Fed and other US policymakers. If the reading of the indicator rises more than market expectations, we may see the US dollar strengthening and vice versa. Please note that the change in this indicator can be very volatile and could create a wider market distortion, as the ripple effects may also be felt in the US stock market. Similarly, the employment change figures published in other countries, such as the UK and Australia, measure the change in the number of employed people in other economies with similar effects on their respective currencies. Then we have the ADP employment report. The ADP employment report is a US employment market metric and is announced every month. It's a private sector measure of the monthly change in non-farm private employment. It's usually released 2 days ahead of the official employment data and is considered a gauge of the NFP number. We tend to advise against interrelating the two indicators, as the correlation between the two has fallen in the past few years. Nevertheless, still a rise of the indicator's reading is expected to provide support for the US dollar and vice versa. Then we have the jobless claims, initial and continuing. The jobless claims figure are also a US metric for the employment market. It's the number of people who are filing or have filed to receive unemployment insurance benefits in the previous week. There are two categories of jobless claims: initial, which comprises people filing for the first time, and continuing, which consists of people who have been receiving unemployment benefits for a while. The release is on a weekly basis, and a figure higher than expected could weaken the US dollar and vice versa. In the next lesson, we will discuss indicators regarding consumption and business confidence.